I'm going to introduce you to the moderator of our next session, which is What's New in Inclusive Finance, hosted by Yunus Social Business Fund, Bengaluru. I'm pleased to introduce our next moderator, a moderator of the session. She leads the impact measurement and management practice at Yunus Social Business for its global portfolio in India, East Africa, and LATAM. She is an experienced impact investing strategist and portfolio manager with a proven record of maximizing social and financial returns for 30 plus social businesses across the globe. She works with diverse impact stakeholders on themes such as agriculture and smallholder productivity, rural livelihoods, climate change, adaptations for BOP, waste management, and gender inclusion. Please give a warm welcome to Manasi Parvatikar.
So before I got started, I wanted to just bring back the attention to 200 Million Artisans report. And so they've been talking about financing the handmade revolution, and it also talks about the missing middle. We've all been talking about the missing middle, and honestly, it is the gap that exists today where enterprises are either too small to be funded by microfinance or either they're too big for mainstream investors. And a number that struck us on this report was that 87% handmade enterprises are struggling with which financial instrument is right for them, whereas 92% are still open to catalytic capital. And on that note, I want to open the panel. And I'm Manasi Parvatikar, as I was introduced, part of ISP, and I would love to introduce the panel now. So we have today folks, four visionaries are going to talk about inclusive financing and the gaps while dispelling the systemic bias that this space has. So first would be Nikhita. Nikhita Nadkarni is a program lead at Acumen for the Agri and the Workforce portfolio. Nikhita has worked in the intersection of impact and finance for many years, including initiating the data-driven governance portfolio for Tata Trusts. Next, we have Payal Nath, who is the CEO of Kadam Haat. She co-founded Kadam Haat and Kadam Foundation, and she's been working on upskilling rural artisans to make them self-reliant and have dignified local jobs. She's also one of the 75 women honored as Women Transforming India in 2022 by Niti Aayog. We have next Shravan Shankar, who is the co-founder of Climake. Climake is a growth platform to improve access to finance for climate startups. Climake has enabled around 60 million USD in financing to climate startups. Shravan also has won the co-founder hat before at AtWorks, and he's been recognized. AtWorks has been recognized as a circular economy solution by Ellen MacArthur, as well as recognized by the Government of India as a smart city solution. And last but not the least, we have Vipul Jain, who is the co-founder of Hearth Ventures. Vipul is a tech entrepreneur, investor, and a longtime philanthropist. He founded a publicly listed company, Kale Consultants, which exited to Warburg Pincus. He's also a co-founder of two NGOs, Catalyst for Social Action, which works with 110 care agencies as well and serves 5,000 children. He found Hand for Handmade as well. He is the co-founder of Jabarkhet National Reserve, India's first private natural park. And after his multiple stints as investors in many VCs, Vipul has now founded Hearth VC, which is focused on creative, cultural, and circular economy. So I would like all of you to give them a big hand, and we can get started. My first question to Payal. So Payal, I think for the social enterprises in the audience, you would love to know how you navigated the transition from, having a not-profit, which was Kadam Foundation, to then establishing a for-profit Kadam Haat. What has been the learning, the unlearning, and how do you balance the funder and investor and the extreme sides of two spectrums?
Thanks. That's a very good question, very pertinent, I guess, at this stage. Yeah. So Kadam, the NGO, was born out of a necessity. The necessity was at that end to reach out to the communities and do a hand-holding and understand what their requirements were. And whatever they required in terms of setting up an ecosystem to train them in that area. Kadam Heart, the for-profit, I think everybody has been talking about it from the very beginning, how important sales are. So Kadam Heart was born also out of a necessity, the for-profit. So whatever it takes to make this entire 360-degree ecosystem, we thought we will give a go. And in terms of learnings, I guess both need ROI. The investors who are investing, they also need a return on investment, as well as at the back end, somebody who's invested, it's somebody's money. It's, if on an artisan they have spent 7,000 rupees or 10,000 rupees per year per artisan, let's say, they look that this money should convert so that these artisans can have at least about a double, after a certain period of time. So yeah, so both, this is the main learning, that both need an ROI, and we need to build a model and a bridge in such a way. Yeah.
Great, thanks, Payal. And moving on to Nikhita. Nikhita, Acumen invested in Desi Hangover from the Acumen Emergency Fund, which was set for a 5-year term. We'd love for you to talk us through how innovative the structure was, and at the end, also what are Acumen's expectations for return as well as impact?
Sure, thanks. So I think before I start, just want to start with an honest admission is that I think Acumen has kind of keenly watched the space, the creative, cultural, handmade space, but we've not really made any of our pioneer investments in this space. So I think we're also like learning along the way. We want to take it a little bit more cautiously also because we don't fully understand the space ourselves, right? So when it came to Desi Hangover, what had happened was this was during COVID, and we had raised, so Acumen had raised an Acumen emergency fund. And the idea of the fund was to support fellows as well as the portfolio companies who were struggling on account of COVID. So they were struggling with just to stay afloat, right? And Hitesh Kenjale, who's the co-founder of Desi Hangover, was obviously, he was eligible to apply for this emergency fund. So the portfolio managers back in the day kind of started working with Desi Hangover, kind of putting together their plan and kind of helping ensure that they got the loan that they needed. So I think in terms of the structure, we wanted to keep it super simple. It was not meant for growth capital. It was meant for business continuity. It's really as simple as that. So we wanted to keep the structure really simple. So minimal due diligence, because from a regulatory perspective, we needed to keep it as a convertible note, which had very simple terms. Either you convert next round 20% discount for the next valuation that you do, the subsequent round, or for that matter, or repayment terms, like flexible repayment terms. Also, I think learnings along the way, we first had like these, 12-month monthly repayments, which we had to restructure because we just realized it was an operational nightmare and all of those things. But just keeping it very simple. So in terms of financial returns, really, the idea was to just kind of, help support them at the time. And in return, just look at repayments in terms of so that we get our capital back. I mean, the investment amount back. We were not looking at any kind of upside over here in this case. In terms of outcomes that we were looking at, like the impact, the social impact outcomes on the ground, I think one thing that we were very clear of was that at least 50%, if not more, of this fund goes towards the artisan community itself that Desi Hangover works with. I think just for the uninitiated, so Laksha's here, but just for the uninitiated, Desi Hangover is a company that works with artisan cobblers in Kolhapur and Belgaum. And they kind of, they're centric to the model. They're essential to the model. They work back with them, not just training and capacity building, but really like the sourcing of the shoes are actually designed and manufactured by them. So I think the idea was that at least 50%, so in fact, eventually I think close to some 61% was towards supporting these artisans during the COVID period.
Thanks, Nikhita, for that. And we'll talk a little bit more about Acumen's approach to catalytic capital. But moving on to Vipul, Hearth Ventures is India's first and perhaps only fund that is right now dedicated to the creative and the circular economy. We would love to know what led to the conviction that drew you to this sector, and what are you looking as an outcome from this sector?
So as you mentioned, I'm from the tech sector, right? I'm a tech entrepreneur. And there are many things that I've seen in the tech sector which I think apply to this sector. One of the things that you know, but we forget is that the tech sector is maybe about 25 years old, 30 years old. When I joined, there was no tech sector, right? And look at where it has come in 30 years. And some of the advantages that the tech sector has, which is the immense talent available, the engineering talent available at a very low price when you compare to the Western world. The same competitive advantage applies to artisanal talent. The skills that we have in a whole range, the diversity of skills that we have, right, is amazing. There's no other country that has this competitive advantage. Now, what is it that enabled the tech sector to grow so rapidly? Right? I think there are three things. Right? One is the availability of capital. All right? And the whole ecosystem of seed funding, angel funding, growth capital, private equity has come up. So whatever be your scale, you have capital available. It's not a constraint anymore for the right entrepreneur and the right idea. The second are role models. You've actually seen wealth created, right? Through very honest and good work, right? And that is so I would say, inspiring, so motivating particularly for the younger generation. Okay, and the third is mentorship. Right? We have seen that, today in that ecosystem, there are accelerators, there are mentors, there are incubators. There are lots of people who are ready to help young entrepreneurs not make the mistakes that, you learn in the school of hard knocks. Now, so our thesis was that if these three enablers come into this sector, right? And we call it the 3C sector, the creative, cultural, and circular economy sectors. Then it will explode. I have no other word for it. Entrepreneurial energy and the talent we have in India is so amazing that with the right ecosystem, it will just catch fire. The young generation, right, thinks very differently and has the energy and the skills to actually make this sector very significant in the global market. I'd like to say that India, all our handicrafts, handmade, is 1.6% of the global market. Why can't we be 20%? Okay? So the opportunity exists, but the enablers do not exist. This sector is completely ignored by mainstream investors. Okay? So with this thesis, and it's not surprising that the report that 200 million artisans have done have come to pretty much the same conclusions, right? But with this thesis, we actually decided to plunge, okay? So we actually invested in the last 15 months in 5 enterprises. And it's a very interesting, different types of enterprises. One is Kadam Haat. We're actually delighted to invest in Kadam Haat. And it's I think in the last 1 year, what Kadam Haat has achieved is very, very motivating. Maybe Payal will share that with you. We invested in a D2C platform that sells sarees, targeting the Indian diaspora. Okay, the Indian diaspora is a huge emerging market, and they really do a very, very good job of it. The founders, interestingly, come from the tech sector, who have a passion for sarees. Okay, which is another interesting learning, that entrepreneurs, you need skills which are about technology, about business, and of course design. Okay? And you need entrepreneurs to come from various sectors because they see a business opportunity. And of course, once you start working in this sector, you fall in love with this sector, right? That's the way it works. So that's another company. We have invested in a company that's a technology firm for the fashion industry. Another company that's a technology firm that connects designers to manufacturers. I mean, interior designers who are looking around for products. It actually enables them to do the experience online, right? So I'm just saying that when we think about this sector, there are various aspects in this ecosystem. All of them need to flourish for us to really get to the opportunity that we have. The answer to your question, what has motivated me, is for one, I've fallen in love with this sector. For this, I have to thank my wife. She's been working, many of you will know her. She's Shravan, Jain, the founder of Biodesign. She's been working in this sector for 20 years. I've been at her side when she visits artisans. I've seen the magic of what design can do. But equally, I really feel that for India's inclusive growth, this sector is absolutely essential. No matter how many trillion economy we might become, if we cannot find jobs which do not involve migration, which are non-farm in the rural areas, which are for women, which they can work in their own community, and jobs that are fulfilling and give dignity, where is the inclusive growth? Thank you.
Thanks, Vipul. I want to bring in Shravan to get an alternative perspective to this discussion. You've had your expertise in climate finance, and you've seen how that's grown in the last year. In 2022 itself, in the report that you published, there's been a 40% increase in the investments that have come to climate. So what are the key drivers that are driving international and domestic funding towards climate? But more importantly, are there some parallels that you can draw for this space?
Sure. I just first want to just touch upon a really interesting point Vipul mentioned, and I think that's also true in the climate space, where we don't have an innovator problem in India, we have a scale problem in India. And I think that's also one of the things that has been recognized in the climate space and why we're seeing diversity of financing coming in. Two things which make the climate space very unique is one, and it's where it's very different from mainstream tech, is that opportunity in this space is defined by the potential loss. Climate change effects, what happens to us. That's where really our opportunity comes from. And the second thing is that climate solutions are basically replacing things which are already existing. Think of energy efficient fans, EVs to petrol vehicles. So you have this additional barrier. Compare that with the tech and VC space. It's about newness and opportunity. It's about productivity, about efficiency, about doing things where you can clearly show performance which equals to returns can be demonstrated. Climate does not have any of these things. So it's taken a long time for us to get to this stage where stakeholders, government, people, businesses, funds are recognizing that we cannot prolong this anymore. It took so for the longest time, renewables was synonymous with climate action, and it has taken about 20 years for that wider financing ecosystem to sort of come, I would say, somewhat mature. But today, alluding to the vision that Vipul has outlined, you can find an early stage investor, you can find late stage, you can find debt, you can find equity, you can go to public markets. That is established. But that took 20 years. We don't have 20 years in the climate space for other areas. So one of the things that we were really happy with about when we did our report last year on the state of climate finance in India is not just the number of funds who are now entering the space, which is significantly more, it is where they were putting their money. The money was going into new emergent sectors where 2 years ago there was barely anything. Waste and circularity, for example, is a sector which I think is the largest driver we have seen in India. And that grew from, I think, if not mistaken, about less than about 10 million in 2020 to more than 130 million last year. And that's a significant scale. So where we are seeing a lot of confidence is that now, because the sector has established, taken its time, now there's urgency for this, and this whole idea of the potential loss being recognized for actually investments coming in. We are seeing a lot more people taking bets in areas which are more forward reaching, and that is important because we need ecosystems to thrive. And that's very similar to what's needed in the creative economy space. The way I see it, the creative economy space also works on this similar thing of the opportunity is in the potential of loss. Take right from the sort of natural materials that most of this industry is based on, that's being threatened so significantly today, which is why it's very easy for us to talk about creative economy and climate change together because it's true. But then there is also this that other element of newness and opportunity, which is there exclusively in the tech space, which is also something which the creative economy can also leverage and build on. So I think one of the things that is pretty critical is what we went through in the climate space as this very different sector from the mainstream is something where we can accelerate the learnings for the creative economy space. We should not be taking 20 years for like the main creative economy space to become mainstream. And that's really based on understanding what were the things that went right. And I kind of go back to that first point I mentioned, building on from Vipul's answer, that India does not have an innovator problem. We have amazing innovators. We have amazing people building solutions. We have a problem of how do we get them from scale, from a lab to a pilot, from a pilot to early commercialization, and from getting from commercialization towards growth. So what I hope is that the creative economy, the sector, can look at what has worked in the climate space today, but not looked at how it was 20 years ago. What it was 20 years ago was not suitable enough to build how we can accelerate the space.
Thanks, Shravan, for that. And now I want to take time to sort of break down into the main topic, that is catalytic capital and the gaps that exist with it. And moreover, also talk about what the right fit of capital for creative enterprises is. Vipul, I want to start with you. There is an important data point from the research that 200 million did, that only about 18% understand the right fit of financing today, social enterprises. As an investor, could you give us some insights into how enterprises should think about when finding the right fit of capital?
So, the right fit depends a lot upon the stage that you are in, and of course, your business model, right? So, very broadly generalizing, debt is appropriate where you have regular cash flows to be able to service the installments, right? But where you need to invest in design or in marketing or in looking at product market fit or exploring new markets, that's all very risky, right? And that really instruments which are around equity, right? Where with equity, the investor understands that there's a risk associated with it. Those are more appropriate, okay? And so that's broadly one thing. When you look at equity itself, you start with what you put in yourself, your friends, family. That's normally the first stage. The next stage, you look for maybe some angel funding or seed funding, right? The next stage is actually the early growth institutional investors, and then there are subsequent institutional investors. That's what builds the entire ecosystem. One thing we must remember about institutional investors, and I would say even other investors, is that at the end of the day, they will want a return. It is not philanthropic capital. Nor should you think about your business as being philanthropic. If you're philanthropic, that's great. But if you are for profit, you have to keep an eye for growth and profit, right? And for your investors, it's only fair that you are able to give them a decent return. Okay? Of course, they'll be attracted to this sector because of the social impact. Okay? And yes, their expectation of returns may be muted, but at the end of the day, right, it still has to be a decent return. Otherwise, you may get the one-off investor who has a passion for it, But why will mainstream investors come in? Okay? So you have to keep that in mind. And this ecosystem exists in other sectors. In this sector, it is very nascent. The good news is it's beginning to happen. All right? We might be the first venture fund, but there are angel funding networks already which are investing in this sector. I think, all this today, the fact that we are sitting here shows that there will be other investors who have an interest in this sector, and the more they understand what instruments and how to do, etc. But I would equally say that for the entrepreneurs in this sector, you have to hustle. Okay. You have to hustle and you have to work really hard to actually make that investment worthwhile for the investor and yourself, right? You'll be in the same boat. So you really have to have that passion, right, to grow and be profitable. In this sector, profit should not be considered a dirty word. It should be very aspirational. Okay, that's one mind shift that I think is beginning to happen and must happen. Okay, it must happen. Okay, and somebody else mentioned the word middleman, right? I mean, the middleman is really somebody who adds no value, right? Anybody who adds value is somebody in the value chain, right? And people who are in the value chain, they are adding value and they deserve to have a part of the value creation. So we must not confuse middlemen with people in the value chain. Okay, so that's just another, I have the benefit of coming from outside the sector, but deeply passionate and in love with this sector, and therefore I can make statements like this and get away with it.
Thanks, Vipul. Payal, I wanted to move over to you. As an entrepreneur, how have you evolved your understanding of what catalytic capital means? And maybe you could talk a little bit about the investment that you received from Hearth Ventures. How has that influenced your growth, and how has that opened any new opportunities for you?
To answer your question, I want to take one step back and talk about the back end supply chain at Kadam, the NGO, where we have trained, set up the supply chain, made a product perfect in quality with the community as business partners. Now it needs to be sold in the market. And for selling, I mentioned this earlier that there is a return on investment. Even UNESCO or World Bank, who are funding these projects for us at the back end, they also want to see if they have put a certain amount of money, these artisans should be earning. Now, how do we ensure that these people get a sustainable income month on month? Which means that you have to have as strong a front end, market channel. Now, in Kadam Haat, before we took the funding, we were all over the place. We were doing organically whatever sales we could manage. It was D2C through exhibitions. It was B2B through whatever orders came. It was through Amazon, through various aggregator platforms, wherever we could manage to sell. But that's not the science of selling, right? So you have to find the right market fit, the right customer acquisition cost kitni hai? Is it inside the product cost? What are the kind of algorithms of the platforms where you're going to sell? So all of this, I'm like an excited child now, sitting with the team and learning from all these techie students, not students, I would say. I call them students because they are younger than me, but they are experts in their field, right, in the marketing space and technologists. So we've been able to hire them or are hiring more because of this fund. And they believe in us because they have this possibility that, that we will be able to create wealth for them as well. The beauty is, how do you create wealth for the artisan on a regular basis, plus for the investors who have invested, and plus for the growth of the company, without sort of taking away from anybody? You don't have to. There is enough for anybody if you manage the planning, the design the business properly. So I guess they've helped us in that regard, giving us a mentor and putting this together. Yeah.
Great. I want to move to Shravan. I want to pick up on this one data point that I had mentioned when I was introducing the panel, which was that 92% of the surveyed enterprises actually thought catalytic capital was a good fit. As someone who's been championing the demand-led investing, which is targeted towards catalytic capital, now be it pricing, be it partnerships or patient capital. How can these sort of more for the capital providers that are present in the audience, how can they offer more innovative structures and which can fill this gap that has been there in this sector?
Sure, absolutely. And I think the root of it is to recognize that this is a separate sector. It is a different sector. It has different perspectives and different contexts of working, and that should be respected. One of the most common things that we have seen when we've worked with funds and spoken to them is how they draw a box which defines what the sort of maturity of company they want to look at, maybe the ticket size, maybe the expectations of return. And then they ask the question which they should ask at the start, which is what sort of enterprises are out there. But now, once you've fit that box and you defined it, you're trying to force fit into something, and especially in nascent and upcoming sectors, and we face this in the climate sector as well, you'll come back with this one statement which says there's no pipeline. There's a lack of pipeline. There are no investable companies. You'll have what Mr. Chatterjee mentioned, it's a sunset sector. It's a sunset sector because you're using the wrong lens. And I want to point back to what Dipanshu mentioned, which I think was a really good point, specific to the creative economy space. You have a higher success rate than most startup sectors that we have. So the way the economics of comparison should not be between a tech startup and a creative economy enterprise. It should be between the fund. If you have the recognition, and if you know that you can actually back and support more number of startups, you have a higher percentage of success, then surely you can definitely work with a different return expectation, which is concessional in some form. But the most important thing, which gets missed out over and over again, is this lack of understanding what a sector is like. You mentioned demand-led investing. So that is a term that we kind of coined when we were working in partnership with a couple of, they call it entrepreneurship support organizations out of Cambodia and a couple of funds out of Australia, where as a COVID hobby project, everyone talks and we ended up having a conversation. And against the same thing, in the impact space, we work with startups, we work with enterprises on a daily basis, but then funds tell us that there's basically a lack of pipeline, lack of access to capital. Now, we heard that enough times that we really wanted to understand what is actually going on. And that's when we took a step back. We understood and looked at what are these funds actually looking at? What do they do? How do they actually operate? And which is when we found out that whole, this is my box, this is where I'm force fitting everything. If you don't fit into this, then I declare the entire sector invalid and it's not investable. So I think one definite thing from funds is a reorientation, but that's also necessary for them. And they're also kind of dependent on who's funding them. So there's a level of necessity to influence your LPs, to actually talk to LPs and tell them, and for LPs to get on board with this idea that we are going to take a different approach for doing whatever it is. But specific to the creative economy, if you have a higher percentage of success, that should not be a hard conversation to do. So when we wrote this report on the demand-led investing, and that's actually how we ended up connecting and meeting with 200M, we realized that it was not rocket science to tell people that there are funders who look at an organization, understand needs, and then deploy capital based on those needs. They can be concessional. Yes, we have concessions like price, patience, partnerships, maybe even like pledges like credit guarantees and all that. But it's being done, and people are doing it. But the most important thing is the lens at which you are focusing on this needs to change. It is something which is slowly coming in the climate space, still not to a great extent, but it's something where today, for a nascent sector, the creative economy, which one of the fundamental things, and I come from outside the space, I could be taking a wrong statement. Most enterprises are small. It is a very fragmented space. There is need for aggregation. And because of this need for aggregation, this need for influencing LPs is a very strong, important play for an ecosystem actor. And that is, for example, like what a 200M does, what a creative dignity does, because they represent what happens on ground. And funders should be talking to them without prejudice. That's very important. And that is how you can really then define and understand how do I actually operate in the space which works for me and works for the enterprise.
Thanks, Shravan. I have one last question for Nikhita because we're sort of running late and I do want to take up questions from the audience. Since Desi Hangover, Nikhita, you mentioned that Acumen has actually accelerated investments in the CMH space over the last 2 years. Could you talk us about how your thesis evolved for this space and also what do you think can be done to make it more commercially viable?
Right. So I think the overall kind of thesis at Acumen is to work towards poverty alleviation. And this, one of the sectors through one of the portfolio work through which we do this is workforce development, where we're saying that, you know, of course, there are numbers to say that there's huge amount of informality. Almost some 90% of India's workforce, 520 million workforce is informal, which means low, inconsistent wages. Obviously migration adds to the problem as well because it puts up pressures. The seasonality of income is an issue. The absence of any kind of social security benefits, drudgery, I think all of those elements that we spoke about. And that is something that we want to be able to address through the work that we do in workforce development. So while in the past we've generally worked with skilling platforms, with job platforms, and more recently with solutions that are helping build resilience through, say, access to information or access to financial products, access to social security. I think where we're now going towards as part of our evolving strategy internally as well is to look at models that are able to really revamp workforce practices in certain sectors where there's huge amount of inefficiency and also a huge amount of drudgery and exploitation that happens. At the same time, going back to, I think, what Vipul mentioned earlier is about really how are we able to move away from the centralized job creation piece to decentralizing it? How are we able to create jobs through rural sourcing, rural manufacturing? And that is really where the CMH space fits beautifully as part of our thesis. So since Desi Hangover, we've again, I'm going to say what I said earlier, we've not really had any mainstream, like the typical pioneer investments that we do, which are slightly more higher ticket size. We've actually funded 2 other organizations through 2 of our different programs. So there's an interesting organization called Anuprerna, which we funded through our Green Growth Accelerator. Now, the Green Growth Initiative, and they were part of the accelerator that we had, which is at the intersection of workforce and climate. And what this company does is, while they're essentially ensuring, transparency and, revamping the supply chain when it comes to, sourcing directly from weavers and artisans, they're also ensuring elements of, being conscious to the environment in terms of, zero wastage, looking at, organic products, moving away from the chemical kind of, essentially ensuring that they're climate conscious in their entire approach. The other company, and, Nivedita is here, so that's through part, so Karke Valley is something that we've actually funded as part of our Acumen Angels program. Again, both of these are sort of, more, I would say, programmatic support work that we've done, not as part of our investments work. And in fact, we're in the process right now of actually conducting a due diligence as part of our pioneer investments, where we want to look at, so it's an interesting model where, it's about, these sort of miniature reeling machines. And we're looking at how, asset ownership can actually be transferred to the women. So they become, micro entrepreneurs supplying to the organization. And again, we're in the process of due diligence, but we are sort of moving slowly towards kind of making investments in this space. So yes, our thesis has evolved, and as I think Payal started, she said there was a lot of unlearning and relearning as someone who was on the entrepreneur side of things. I think even for us as investors, there's been a lot of unlearning and relearning. So I think just getting and recognizing what scale means in this sector. It's very different from the work that we do either in skilling or agriculture. It's very different. So having that realistic understanding of what scale means, I think that's been our kind of, major learning has come into the space. But in terms of this, what are the basic things that we're looking at in this sector? And again, it's an evolving thesis. I think one is models which are able to work with the community, keeping them centric. So essentially, they're integrated within the overall value chain of the business model that these enterprises have, and not being just treated as vendors or like commodity in this space. So as you grow, how do you make money not just for yourself but also for these communities as you grow? So I think those are things that we're looking at. So would love to see interesting models where there's community ownership, or for that matter, models where there's kind of like profit share. But I mean, looking at many different elements of it. So those are models we're definitely interested in looking at. Also, I think the second thing is gender, really. And we know that, of course, this is a huge, women disproportionately represent in this space, but a lot of the work that they do is invisible. So really, how can we, especially when you have like these weaving households, they're part of, it's one weaver who supplies to them, but the woman's doing the work. So how are these models actually recognizing the work that these women are doing? So those are also models that we're interested in. And also tech enablement. And when I say technology, I mean, how do you use technology to improve your efficiency when it comes to manufacturing, but at the same time, remain true to really the handmade and the handcrafted elements of the work? And also, how do you leverage technology for better marketing and better access? And how do you democratize this technology so that your communities are able to use it? So these are obviously elements of, that we would like to see in models. But again, we're on the lookout. I know easier said than done. Also from our end, right? I think we're expecting like everything, but I think we're just moving towards that, and I'm just glad that we're moving towards that space. And I think, forums like this gives us the opportunity to kind of learn, absorb, and reflect on our own kind of thesis and introspect, I guess.
Thanks, Nikhita. And I think it's been great to hear from all of you. I'm just opening up for if there are any questions.
As an ecosystem builder, my name is Sucharita and I represent Andy. I'm trying to understand what has changed and what do we need to do in the ecosystem. In the impact sector, when I started in 2007, I know impact investors generally said you won't touch craft-based enterprises with the end of a barge pole. Excuse the use of license, it wasn't a quote, but in effect, that's what they were saying. So I'm trying to understand what has changed and therefore what can we as an ecosystem builder do. And I noticed you brought up scale a few times, and Shravan, you talked about changing the lenses through which you see. So my question is, has anything really fundamentally changed, right? Which will actually have impact investors, less than market return, all of that is fine, right? But actually create models that work for this sector. So that's my question, because you are talking about a private equity model that has certain expectations, and then of course you have finance first and impact first and all of that fancy jargon, right? But has anything really fundamentally changed in the structure of investing? Because if that hasn't, LP's expectations aren't really going to change. So one is that, and if it has, it'd be lovely to understand gaps where you think an ecosystem builder can actually step in and sort of hasten that, because we've been saying, I know Acumen has been in the sector for more than 2 decades, if not more, and we're talking about them investing now in the sector, which is great, right? But we don't want to find ourselves in the same situation that climate enterprises have, which is, knocking on the doors 20 years later saying it's too late.
So I won't say things have changed. Things are changing. All right? And I think you're absolutely right. The typical stereotype about this sector as far as impact is concerned is that it's too fragmented, too difficult, too slow, too many issues. Right? And what's going to change that perception? It's really going to be success stories. Okay? The money follows success stories. So we need, and when I say we, I'm talking about all of us collectively. We actually need to take the success stories and celebrate them. We need to show that there are profitable enterprises that can do impact, be profitable, and grow. And they don't need to become billion-dollar enterprises. They can become medium-sized enterprises where they are profitable and they continue to grow. And therefore, so that's what we need to establish. Enough evidence. I think there's enough evidence of the need. Okay,
Yeah.
we actually need to tell investors, hey, this is not money down the drain. We are not philanthropic, woolly-headed guys. Okay, the entrepreneurs are very good business people while they love this sector. That's what we need to establish. And there are success stories. Okay, I mean, Jaipur Rugs is a fantastic success story, right? The point is we need to have, 100 such success stories at different stages of their evolution, right? And as I said, really, Hearth Ventures is the first fund that sort of committed to work only in this sector, right? Everybody else may do one or two investments, but they don't commit to this sector. We have actually taken the plunge and saying we are only going to work in the cultural, creative, and circular economy sectors. Okay, it is a bit of a leap of faith. Okay, but it comes from a deep commitment to make this successful, as well as evidence that there are great entrepreneurs, that is a market, that there are tailwinds. And when we talk about this sector, it's not just the producer or the artisan, that we typically think about. There are technology companies working in this sector. There are marketplaces. There are, people who create experiences. There's a whole multitude of options. Okay, so so that's one. In terms of what will accelerate the change, apart from success stories, it's actually people coming together. And I'm so encouraged with the fact that over the last 3 years, post-COVID, I mean, Hearth Ventures was born out of COVID, Handmade, Hand for Handmade was born out of COVID, so was Creative Dignity, so was NICE, and 200 million artisans. And
Yeah.
look, we are all talking the same thing. And as we start talking about it, it will get through, right? It's a certain momentum, and then there's a tipping point, and then suddenly everybody says, yes, this is the new Gyan. Okay, so we just need to be at it. I'm actually very confident this will not take 2 decades. It'll actually happen in the next 5 years.